Hello folks, this is Raj Sastry from Raj Option Trading. Today is May 16th, 2021. I want to talk about stock and option trading ideas for the week of May 17th, 2021. So we'll talk about a couple strategies here. We'll talk about Ttm Squeeze, which is a trade the market squeeze from John Carter. This squeeze can be used to buy stock, buy call or call spread. And we will also look at a few low volatility, low RSI plays. So whenever volatility is low and RSI is low, it's a good time to buy stock or call option or call spread. So the key is really make sure even the RSI is low, so that way you can make a good decision. And you should also make sure if you're buying, make sure you're not buying at the top. It's not at a 52-week high. And we'll also talk about high volatility and low RSI. So this is a good time to really look at some of these strategies. So when the volatility is high and RSI is low, you can buy stock itself or sell put options or put spreads. In some of these strategies, for example, even the low vol strategy or high vol strategy, you can also do other things like butterflies. Butterfly is one of the very good strategy in these scenarios when the stock is not doing much. So with that, let's dive in and look at some of these strategies. First, we will look at trade the market TTM squeeze strategy. And what I have here is I got a couple of stocks here, right from Virgin Galactic, as you can see here, $16 stock. And the way I organized is really I made sure all these stocks have good volume. As you can see here, many of volume here is more than 1 million shares traded. So that's the key when you buy stock or options. You always need to make sure there's a very good volume. So that tells you there is enough liquidity in the market. You can get in and get out easily. And also, I looked at 1 year performance here. Many of these stocks have got, some of them have got good performance, some of them have not so good performance. And I also highlighted few stocks here which have done nicely from a sales growth perspective. And those are the ones I normally look at, to initiate a long position. So with that, let's look at here. First one is Space Virgin Galactic. As you can see, there is no sales. It's right now it's purely speculation, but it's a good company to speculate in my mind. It's a $16 stock. Stock has fallen drastically, as you can see here. 1 year it's done only 1.9%, down 70% in 3 months, down 39% for 1 month, and it's off 74.20% in 52 week. And then we got a couple more here, as you can see here. Flowers and Food, Activision, another great stock. Anaplan, same story. And as you can see, I got here, these stocks where there's a 1 day squeeze. Basically in the 1 day chart, it tells you there is something going on. The Bollinger Band is going inside the Keltner tunnel, and there's a squeeze triggered or about to trigger. So that's where you see 1 day squeeze here. And then I got 3 day squeeze and 1 month squeeze. So, typically, 1 day squeeze lasts for a couple of days, 3 day squeeze lasts for, maybe a week or two. Weekly squeeze will last for a couple of weeks, and monthly squeeze is a little longer term. And then I got a couple more strategies here. Next strategy is really this continuation here. Next strategy is around low IV percentile and low RSI. When the IV percentile is low and the RSI is also low, that's when you can initiate a long call option, or you can even buy the stock or buy call spread. So with this strategy, we got stocks like Beyond Meat, ONEM, Fastly, one of my favorite stock, Dropbox and Chegg, and so on and so forth. As you can see here, some of the things you got to be a little careful is whenever there's a earnings around the corner. For example, Vipshop earnings is coming around the corner. So you got to be a little bit careful here. Even with the earnings around the corner, Vipshop, if you look at the IV percentile here, it's just 31. So that tells you, it's not too high from an IV percentile. Still, you can buy, share or even call option for that matter. And I got a couple more here. I love stocks like DraftKings, NVTA, and even FireEye, and some of these stocks. And we got continuation here, low IV percentile and low RSI, good time to buy, call option, even stock for that matter. And we got plant electronic, good stock which came down drastically, and even Bloom Energy, semiconductor stock here, Stoneco, one of my favorite, also good time to buy, and so on and so forth. And the next strategy is really high IV percentile and low RSI. When the IV percentile is high, this is when you can, you can basically sell premium, like you can sell put options, or sometimes if it is close to 52-week high, you can also sell call option or call spread. So, we got a couple of stocks here, as you can see, are Bluebird Bio, Insight, Gilead, and so on and so forth. And this is a continuation of high percentile. You can follow same strategies here, and you can also buy stock. For example, stocks like Editas, $33 stock, has come down drastically, 66% off of 52-week high, and they're down 20% in 1 month. Some of these stocks, you can buy outright, or if you want to play options game, you can do that too. And we got some of the good companies like Elastic, Avago, Lowe's, same story. I think Lowe's is almost at a 52-week high. I would be a little bit careful. I think earnings is also coming around the corner. So you got to be a little bit careful with some of these retail stocks because earnings is coming. So with that, let's dive into some of these strategies. I'll go all the way to the beginning here, look at a couple stocks, and see what we can do from a trade the market TTM squeeze perspective. So first, let's look at SPCE Virgin Galactic and see what can be done here. There is a squeeze at the monthly level. Let's see if squeeze is worth trading and see the setup itself. So for that, I'll go to Thinkorswim here from TD Ameritrade and put SPCE. All right, so let's go to a chart here. Let's look at a normal chart here. So if you look at the chart here, we got earnings. I think it's done. So it was back in 510 last week, and on the balance volume is kind of indicating it's flat. RSI is going down, showing some bearishness. DMI is showing bearishness. And I think, as you can see here, Check-in Money is telling me, hey, you know what, there is folks are a little bit interested in buying the stock because it's so low. There is some interest level. So now let's look at John Carter's squeeze indicator. So with that, let's see here. There's a squeeze like we talked about in a in a monthly time frame here. So, and as you can see here, we got short-term wave. We call it C wave above zero. It's getting red a little bit, as you can see here, and the long-term wave, which is C wave, it's also above zero, but it's a little bit darker blue. Darker blue indicates it's a little bit getting weaker. So, generally, if you look at what John Carter says, this setup is okay to take because, we have, long C wave above zero, even though it's a little bit negative. I think this setup is okay. It's a little bit bearish. It's not perfect setup. In a perfect setup, I would have liked, this line here to be light blue, not dark blue. And also in the perfect setup, I would have liked these red lines to be either yellow lines, basically yellow lines. This is not a perfect setup, but given Virgin Galactic has dropped off so drastically, and earnings is out of the way, it could be a good time to really initiate a small, option position or even a stock position and take it from there. So with that, let's go into option chain here, see what can be done. So okay, let's go here. So this is a TTM squeeze. So we will go 152 days out. This is a, we got to make sure time is on our side. And if you look at SPCE, $16 stock right now, there is a small uptick as you can see here. And if you go to the chart, as you can see, I do see, I think it's kind of getting stabilized at this point. Let's go back to trade tab here. So $16 stock, I would, if I want to buy stock, stock outright, I could do $16 stock. It's a good time to buy. There'll be always, some, good growth for this stock. It was 62.8, 52-week high. So you could buy stock outright. If you want to play options game, because stock is like 16, you could go here, look at delta 70, which this is close enough, and you could buy 14 strike call option by paying $4.90. So if you do this something like this, you can confirm and send. Your max profit is infinite, and your break-even price is $18.90, and you can hold this 152 days out. And your max loss is money that you paid, which is 490. So as you can see here, your loss is limited to 490. Your profit is infinite. It can go all the way as stock goes up. And your break even is 1890. If stock stays below 1890 by October 15, you will lose your 490. But if the stock goes up, for every dollar stock goes up, the option will go up by 71 cents, which because delta is 0.71. So this is a good proposition. You could buy. It's not too expensive. Other strategy, if you don't want to buy the call option outright because it's at $16, you could do a little differently. You could buy, there are multiple ways to do it. You could even buy 10-20 spread. For example, if I go here, 10 by vertical, 10 and 20. So if you do this, you're paying $4.37, and you have $10 wide spread here. So remaining, $5 and 43 cents or so is your profit. So if I confirm and send here, 563, yeah, $5.60 is your profit. So you will basically, your max buying power effect is 431. You are paying $437 to make $563. You're doubling your money. So this is another way to do. You are paying for $37, but you're doubling your money. You don't need to wait till expiration. You could even sell in between and make money. Your break even now is this is a little more conservative. Your break even is 1437. It's below the current stock price. So you tend to, it's a little more conservative play. So most probably you'll end up making some money because Virgin Galactic is probably going to stay above this price most probably. So that's why there's a good potential to make some money. So this is the other way to play. But if you don't want to pay that much money, you could even do a $5 wide spread. So for that, you could say $16 stock. You could do something like 12.5 and 17.5. So you could buy this $5 wide spread. There you go. You're paying $2.13. It's a $5 wide spread, remaining $2 and say 67 cents or so is your profit potential. 87 cents. So as you can see, this is a little more than doubling your money. You're only putting less money at risk right now, $213. You're more than doubling your money here. This is another conservative way to play. If the stock stays above $14.63, you will end up breaking even. So with that, this is a good strategy. I would think you could implement this strategy on Virgin Galactic. And then you got a couple more here. What I will do is I'll quickly scan through. I'll not go through each and every one. As we see here, we want to make sure IV percentile is low. If you scan through this, flower here, flower scent food, IV percentile a little high for my liking. I would not be initiating a call position at this point here, and the stock is at 52, almost at 52-week high. I will pass this one and probably look at a lower IV percentile. For that, if you look at Activision Blizzard as an example, this one could be a good one. Earnings is out of the way. Next earnings is 8.3. IV percentile is 0. And good volume, which is great. Stock is 10% off a 52-week high. So I could look at something like this, and I can make Activision probably work. So it's got a say a daily squeeze here. So if you go back to Activision Blizzard, there you go. And if I go here to chart, so as you can see here, earnings is out of the way back in 5.4, and on the balance volume is trying to pick up at this point, showing some strength here, and check-in money flow is kind of sort of trying to show some strength, and it's a positive. I think it's it's trying to decide whether it has to be bearish or bullish. As you can see here, at this point the blue line is above red line. That's a bullish sign, but it's not very it's very narrow gap between the blue line and the red line, so I would not call it super bullish at all. And if you see here, RSI is trying to go a little higher, so stock is gaining some strength. And if I look at John Carter's trade the market squeeze here, as you can see, there's a daily squeeze, uh, trying to form a squeeze here in the daily chart. And as you can see here, the short term A wave above 0, long term C wave is also above 0. That's the bullish signal here. And as you see here, there is also a squeeze in the weekly chart. And I think same story here. Long-term wave is above 0. That's a bullish sign. So with that, I think it's a good one to initiate a position here. We can go long side because at least if you see here squeeze, A wave, C wave above 0, and C wave is also bright, bright light blue color. So that shows it's a positive indicator. So with that, let's go to trade tab here, and let's go here, and I could go 96 days out, not a big deal. So stock is at $93, all-time high was 104. I could, depending on what I want to do, I could do 87.97. That's a good spread. I could just buy this spread here. There you go. So $10 wide spread, I'm paying 525. The remaining 475 is my profit potential. I'm almost doubling my money, not quite. And the break even is 92.75, just below the current stock price. Little conservative strategy. And your max loss is 525 and max profit is 475. If you don't like this risk reward, you could even change it a little bit. You could you could do a little differently. It's at 93, so instead of 90, 87.5, you could even do 90. You could do 1995. That's a different. You're not putting too much money into risk here. If you do 1995, There you go. You're paying 255 and remaining 245 is your profit potential. You can almost not quite doubling, close to doubling this other way. But if you're super aggressive, you could even sell 90, 100. And if you sell 90 and 100, you'll pay 450 and remaining 550 is your profit potential, and you're more than doubling your money. The break-even point is just above current stock price, so that's why it's not very conservative, but your profit potential a little higher. I would go with little conservative play here. I would not do this. I would do 87.5, 97.5. So with that, let's jump into a couple more here. um, you can scan through here. So let's look at one of these weekly plays. So for that, let's go to next slide here. We got a couple here on semiconductor, 16% off. That's a good one we can look at. And as you scan through this, I also like car parts. It's a good one. And Deer earning is coming up 521. This could also be a good one. Iv percentile is relatively low. And if you scan through further, even this one here, Calon Petroleum CPE, Iv percentile is pretty low here, and higher car. I would go with little, stocks with the higher volume. So probably I will stick to. Let's see here. Deer or car parts. We'll check how is car parts. It's just 4%, 34% off a 52-week high. Yeah, let's check out car parts and see if it's a good play. All right. So earnings is out of the way, and on the balance volume is kind of little bit going down to flat. Check-in money flow is kind of flattish. So it's not super bullish. Even the DMI, the red line is above blue line. Let's see if it works. Let's go to the TTM trade indicator here, car parts. We got a weekly squeeze like we talked about. So right here, it's about to form. The As you can see here, the blue line, the lines are above zero line. It's a light blue. It's a positive indicator. Um, I think overall, I think it's a good setup here. Squeeze is about to form, and I think it's the line is above zero here. So with that, let's go to option chain here and see if we can make that work. So 152 days out, that's a good one. Stock is at 15.22. All-time high, 52-week high is 23. So I could do 17.5 and 22.5 spread. I could just buy this spread here. So $10 wide spread, buying 17 and selling 27. I'm okay. So I think this is. Let's do one thing. This is not the right spread here. I would go 7.5. 12, 10. Oh, we can actually do 10-20 spread. Let's buy 10-20 spread here. There you go. So we are paying 440 for this spread, $10 wide spread, remaining 660s or profit potential. So I could confirm and send here, or 560. And our break-even point is 14.40, which is just below the current stock price. And maximum we can lose is 440, the money that we pay. I think this is a good strategy. You could confirm and send. And if you want to buy just a individual call option, you could do delta 70 or so. You could do just like this and sell this. Buy this. You're paying $4.50. Your max profit is infinite. If the stocks stays above 17, you will make money. Otherwise, you'll lose all your $450 that you paid. So this is the other way to play. A little bit higher, risk. But if you do spread, it's a little bit lower risk and a little more conservative play. So that's John Carter's trade, the Ttm Squeeze. Next, let's look at low IV percentile strategy. You got all these stocks here. The way you could select is really look at the IV percentile here and look at the volume. You want to make sure volume is pretty good, and also look at the RSI. So because you want to buy stock or buy call option, you want to make sure IV percentile is relatively low, volume is high, and RSI is relatively low. So with that, I would eliminate stocks like INVH because IV RSI is high. But I could go with the as you can see here, we got Fastly. I think it's a perfect setup in Fastly. As you can see here, IV percentile is low, RSI is low, nice volume. So with that, I could go here Fastly. So if I go to chart here Fastly, as you can see here, earnings is out of the way. Earnings was back in 5.5 a couple of weeks ago, and clearly RSI is trying to bounce off at this point. On the balance, volume is also trying to recover a little bit, still pointing lower. Check-in money flow is also lower. So chart is kind of telling us, what, stock dropped after the earnings. Now it's trying to gain some momentum slowly. So with that, let's go back here, and if you see here, I would probably go 124 days out, and I would look at current stock price is 42. You could buy the call option outright, delta 70. So if you want to do that, you could go delta 70 somewhere here. 76 is the next best thing. You'd pay $10.85. If you do this, your max profit potential is infinite, and your break even is $45. If stock does not go above 45, by the expiration you will lose your money. This is one way to play, high risk, high reward. Other way to play is really do a spread. You could do say 35-45 spread. It's a conservative way of playing. So if you do that, there you go. You're paying $520 and your profit potential is 480, almost doubling your money. This is another way to play. Your max risk is 520 and you'll make 480. So this is one way to play, and if you don't want to put $10 at risk, you could also do 40-45 spread. So this is a little less risky and less profit also. So 45-45 spread, you pay $2.25, and the remaining portion of the $5 spread is your profit. So as you can see here, you're more than doubling your money, paying $223 to make $277, and your profit, your break-even point is 4.23, 42.23, which is just below the current stock price. This is a little more conservative. You could do this also. So you can just scan through this, same methodology, make sure there's a nice volume, and IV percentile is relatively low, and RSI is not too high. So that's the way to kind of look at this strategy. And then let's look at some high IV percentile. So for that, if you can look at this chart, you got all the stocks here with high IV percentile, as you can see here. And you want to make sure IV percentile is high, and because you are selling the put, you want to make sure RSI is also relatively low, so that way stock bounces off and you make your money. So with that, as you can see here, IV percentile is 79 for AstraZeneca. AstraZeneca is stock is not doing that great. As you scan through this, 66 Insmed, that could be a good one. We could look at that one. 82 is Sienna. Sienna is again a good stock. Earnings is coming 6.3, which is a month out. We could do that one too. Let's look at CNI here. RSI is 45. That could be a little bit high. We'll check that out. IV percentile is 66. Then we got a couple more here. BCE 79, AstraZeneca, Gilead. Gilead earnings is coming 7 to 29. So let's do one thing. Let's um, we could look at Excel axis. As the reason I'm looking at this one is, as you can see, Excel axis. IV percentile is 65, RSI is 62. That's a little high RSI. I would not go with that. Maybe Adaptech, Adaptive Bio, $34 stock. Yeah, we can look at if ADPT works. Let's go back. Yeah, stock is trying to show some signs of progress here. As you can see here on the balance volume is trying to tick up. And DMI perspective right now it's bearish, but gap is becoming less. The blue line tries to go up and red line tries to go down. Check-in money flow is showing smart money is flowing into the stock. So this could be a good indicator. It's a low IV percentile is 100 right now. It shows it's 100. So let's go and see if you can sell some put option here. Since you're selling put options, you don't want to go too far out. So in this scenario, you could do 33 days out. And if I go to a different chart, okay, same chart here, as you can see, so 33 shows it's trying to use this moving average as a resistance at this point. It can burst through this. So let's go back here. $34 stock. You could sell conservative ways. You could do 30-25 spread. You could just sell this spread. You're not making too much money. It's 30. You're selling 30, buying 25. So for that you're making $1.35 here. You could confirm and send. So this is one way to play. It's not too bad. It's 30 days out. If the stock stays above above 30, you end up keeping all your money or premium that you received, $1.35. But if the stock goes below 30 or even below 25, that's when you lose the money you paid, which is you will kind of you will start incurring loss. So with that, let's look at one more strategy here. You could also think, if you are thinking this stock will not go below 30, you could also sell butterfly. So for that you could go here, sell, and do a butterfly here. So with this butterfly, we are buying two put options at 30, and we are selling a put option at 25. You could say 25 here, and you are basically selling a call option, so selling a put option at this is 35 and this is 25. There you go. So this is not too much money. You're receiving very less money here. You're receiving 60 cents credit. It's not super super premium here. You're getting a little bit less money, but this is one way to play. 33 days out, you'll get 60 cents here. If you do this, you will make money. You will break even if the stock stays somewhere in this range. You'll make $60. Your max loss is 440. I would not go with this because, as you can see here, the profit and loss equation is not great here. So I would not go for this one. I would rather stick with the put spread that we talked about. So next, let's look at a couple of one more here. Let's look at MongoDB, one of my favorite stock, $261, and RSI is 40, IV percentile is 59. We could take a look at this one, MDB. Earnings is 6.3, couple weeks out. All right, so MongoDB, stock jumped up 16 bucks. There you go. I think this is showing some nice indication here on the balance volume is pretty steady. And as you can see here, I would not do this because, IV is going high. That's a good sign. And check-in money flow is flat. I think this is a good one to, sell put option. So you could do 261. So if you want, if you're a little bit, risk taking person, you could even sell, maybe 180 put option. You can get $1.20 if you confirm and send. If the stock stays above 178, you'll keep your money. Otherwise, you'll incur some loss. This is one way to play. Buying power effect is $1,905. But if you don't want to sell premium outright, you could do a little bit defined risk. You could even do something like say say 200 190 spread. You could just sell this spread here. Selling 200 and buying back 190. There you go. You're getting receiving $1.10, and your max your buying power effect is 890. This is the other way to play, and you could do something like this easily. So that's the basically selling premium. And you got a couple more here. You got one more page here. Same story. High IV percentile, low RSI. Keep looking at the RSI here. We got low and high both. Look at low RSI and high IV percentile. Make sure volume is pretty good enough and take it from there. And don't get caught in the earnings. Make sure earnings is already over, or earnings is a little bit later, so that way you don't get into earnings related stock pullback. So with that, thank you very much. Happy investing and trading. Please subscribe. Thank you.